Happy Aloha Friday, everyone. Surf is once again way up on Maui. Giant surf hitting us overnight tonight, so I am very excited. And speaking of excited, the stock market remains overall excited. The NASDAQ was up 0.09% today. Volume was once again above average, so you know what? That's a great session. We continue to trend higher. Volume remains above average. All is well in the land of the NASDAQ. The S&P 500 pulled back 0.13% today. Volume was below average, perfect, including an intraday tail that indicates intraday support. So overall, S&P 500 is beautiful. Dow Jones Industrial Average, same way. Low volume pullback. Not much more I could ask for. Russell 2000 up 0.15% today, closing at the high of day on above average volume, even though you can't see it here. I tell you what, that is absolutely beautiful. Once again, there is nothing I can complain about when I look at things like this. I mean, it's just great. So the market overall looks good. There's nothing to worry about. We can go over a few cells. VVTV. VVTV is closing below the 20-day moving average. However, 642 is not below the low a day of the signal date, which was 638. So VVTV, I'm going to personally sell 66% because BOP did rise today. If BOP would have fallen, like let's say the yellow, would make it 75%. But with the 50-day moving average right there, I'll go ahead and make it 66%. We had two destructions today in stocks that we are long. However, we have very small position in both. Basically little to none left in both of them, so it's okay. Herbalife basically is failing for us. However, it's also closing above the low a day of the signal date. And since it's right there at the 50-day moving average line, I'm going to give it a day or two, see if it can't retake the line. If it decides not to retake it, I'll close below the low a day of 68.15. It'll definitely trigger full sell. But even another down day below this line where we close below the open on heavier volume would probably get me out of NUS. I mean HLF, I won't stick around. And then NUS, full sell. From where we went long, though, it's important about buying right. It's only a 4% loss. So on the remaining position. So the day before, just the day before, we took half of our position off with a 30% gain. And what's left, and we've even partialed out of it. For instance, back in November, we partial out of it, and we partial out of it again in early January. So in US, we don't have much left. But now it's time to leave with that small 4% loss. Pays to buy right. One other sell, FONR. FONR is not closing below the 20-day moving average. However, it's got a sharp close below the 10-day moving average, erasing a lot of quick gains that we got. I mean, in a very short amount of time, we had a 55% gain. Now, sadly, after today, we only have a 31% gain, so I want to lock 25% of that in. A subsequent close below the 20-day moving average on heavier volume will be another 25% sell. But that is it for the sells. Now, I do have one new long position and one stock I want to add to, but before I do that, I got asked questions on these three longs. GLOG. I can't buy GLOG because this breakout is from a very V-shape-like formation. So you kind of get that V-shaped formation right there, the red line. So I'm not going to take that, and that's up over 9% on the day. I don't like buying stocks that extended. It's going to need to pull back to where the pivot point is, which is these highs back here at the end of December. But GLOG is definitely nice. SPWR, why am I passing on it? Because it's up 10% in one day, and this would not be a problem with this cup with handle breakout. However, where's all the big, huge accumulation bars in volume? Where's all my green BOP? I don't see either one. I don't need to see green BOP on this if I see big, tall green bars in the volume section. But because I see more tall red bars than green bars, I'm going to pass on today's breakout. And then also GILD, similar situation. You can see that the red bars don't outnumber the green bars in the volume side, but there sure are a lot of big, tall red bars above average volume. And as you can see below in the BOP section, very, very little green. Still the relative strength line, money stream line hitting new highs, GILD breaking out. This is an ascending base pattern. It looks a little wedgy to me for an ascending base pattern. However, it's legit. So GILD, if you want to go long, you can go long. For me, it's closing a little too far off the high day, and it looks like it's wedging from the December breakout because of the lower volume and the drift higher instead of a drift lower. So I'm going to pass on GILD. What I am not passing on is POWI. POWI is breaking out of a cup saucer-ish base pattern. You can kind of call this, I'm going to call it a cup pattern. Hold on. Let's see if I really want to call it a cup. It's all technical, really. I mean, it doesn't really matter. Yeah, I like to call it a saucer. So it's a saucer pattern. But it's breaking out of a saucer pattern, multiple pocket pivot point buy signals since the December lows. This time I get a volume surge and a BOP surge, so we're going to go ahead and test it out here. If we're wrong, I sure as hell don't risk much, so I'm very okay taking that long. Also, I want to add to MDSO. MDSO's got a very tight chart pattern. And as you can see, this one doesn't have a lot of green BOP in it. It does before the most recent base, so that's what I like to see. You can see it in April and May. You can see it throughout July, August, and in September and November. But in the most recent base, you don't see it. However, what you do see is a lot of below average volume on the pullbacks and a lot of big, tall green bars on, not big, tall ones, but above average volume green bars. All that combines to make this one good, where Guild isn't good and SPWR isn't good. MDSO is good for me. And a cut loss below 50-day moving average means that we're not risking much. So that's all there is to it for Friday. Have a great Friday, everyone, and have a wonderful upcoming weekend. Aloha.